Florida public adjusters and Florida roofers and anybody in the restoration industry, you need to listen to this episode right now. I am going to personally go over all of the Senate bill changes, SD4, SB4, SD2D, and all of the complicated mess. I've gone through this thing back and forth, and I think I finally have an understanding of some of the things that have been passed and some of the new rules and regulations that we as public adjusters and as roofers need to abide by in order to continue to file claims on roofs, on hurricanes, and all of these things. It's complicated, it's confusing. I'm going to do my best to break it down to you in layman's terms so that you can understand how you need to proceed going forward with these insurance claims. And if you're not in Florida, you should probably listen up because this could be happening in your state too. So let's do this right now on the Commercial Claims Show in 3, 2, 1. What's up, advocates? Welcome back to another episode of the Commercial Claims Show. This is a very, very special episode, very, very important episode that we are going to be talking about the Senate bill and the recent changes that we've had in the state of Florida in regards to insurance claims practices. There's a lot to go over, so I want to get into it right now. My name is Vince Perry. I'm the Commercial Claims Advocate, and I am owner and CEO of Elite Resolutions, a public adjusting firm. And frankly, this affects us, right? Because I am a licensed public adjuster in Florida, in Texas, North Carolina, and California. I've got adjusters that work on our team that are all over there, all over the place, signing up claims, and we need to make sure that we're doing it right. But this is also to help everyone else in the industry because I understand it is complicated. I have read through this thing several times. I've got a bunch of highlights in it, and frankly, it's still confusing, it's still vague, and it's still hard to understand. So I'm gonna do my best to try to break this down for you. One thing I need to make clear is I'm not an attorney, I'm not a lawyer, so the way they word these things are just very legalese, and it's hard to understand. Listen up, advocates. Whether you're a public adjuster, contractor, or an attorney, if you have a client that has suffered any kind of catastrophic loss, whether that be by fire or storm or just any catastrophic loss that requires your client to have to move out and incur ALE and loss of use coverage, you need to think about looking at Black Diamond Services. This is an incredible idea for a service that I think is extremely valuable, and I've actually personally used for my clients myself. Basically, what they do is they provide all of the necessary money that is needed to be done for the homeowner to go and move to another place, whether that be a hotel or another home or whatever it is. They basically bill through their insurance policy's loss of use coverage, and basically they provide financial assistance so that the insured never has to incur any out-of-pocket expenses. It's an amazing service. I love the people at Black Diamond Services, especially Millie Varela. If you just contact her and contact Black Diamond Services, I'm telling you, they're going to take care of your clients like you wouldn't believe. I personally have a client who suffered a fire damage and had to use their ALE coverage, and all we did was refer them to Black Diamond. Our clients did not have to come out of pocket a single penny. Black Diamond provided all of the financial money, and they provided the actual location for the homeowner to stay. Amazing service. Contact Black Diamond Services today so you could find out more information for yourself. I'm giving you basically my opinion. I'm giving you the best idea of what I could understand from speaking to some attorneys, speaking to some other public adjusters, and reading through this thing and just getting an idea of what's going on. If you disagree with anything or if I get anything wrong, please, please, please make sure to leave a comment below. You could send me a message on Instagram or Facebook. Very responsive there. Or shoot me a text. You probably have my number somewhere that you could find it. And tell me, hey, you're an idiot. You got this wrong. Or, hey, I can't believe this. Or I can't believe that. But I'm going to do my best to go over this. So let's get right to it. So the first thing is SB4. SB, by the way, stands for Senate bill. SB4, and then we're going to get into all the other stuff. SB4 is regarding the 25% rule. So in Florida for a while, for as long as I can remember, if 26%, right, or more of the roof is damaged, well, then you're entitled to a brand new roof. So, especially after Hurricane Irma, when we were going around signing claims, we'd go up there and we'd see, if an entire slope had to be replaced and it's just a gable roof, obviously that's 50%, the whole thing needs to be replaced. If you had 4 slopes in a roof and only one of them had to be completely replaced, then that gives you about 25% roughly, and then you could get the whole roof replaced. Now it's going to be a little bit more difficult because 25% rule is gone. It is no more. That's all I know about that. I don't know if there's a new, maybe it's 50%, maybe it's more. I'm honestly not sure. Please comment below and let me know. I just know that the 25% rule is indeed gone. Now, again, I'm going to give you my opinion and my thoughts. I don't think this is too much of a big deal. I mean, obviously it's a little bit easier to argue a roof when you already know that 25% is gone, but I know we've gotten roofs replaced when much less than 25% is damaged. And there's a couple reasons for that. Number one is repairability. If it's an old roof, and even if just a small portion of it is damaged, and as you continue to replace this roof, other parts of the roof breaks because it is indeed so old, well, that's going to take you to a full roof replacement no matter what. The other thing is just making sure that you're putting the roof into its pre-loss conditions, which before the loss occurred, everything looked the same, everything looked uniform. Now, if you're going to put a new shingle or a new tile on something that is discontinued and you're going to put something completely different, well, you're not putting that home back to its pre-loss conditions. So even if you're only talking about a small portion, if you live in an association, you've got a tile roof and now you put new tiles on there that look completely different, just a complete eyesore to the association. Not only is your association not going to allow that, but the insurance company is required to make sure it all looks the same as it did before. So they're going to throw those arguments at us, but I think that we have enough to combat it. So I think it'll be okay. So that's the 25% rule. That's gone. Let's get right into like the heart of this stuff, the real good confusing stuff. SB 2D, which is Senate Bill 2D. First thing, I do have what they sent out. It's the whole House of Representatives staff analysis, and there was a couple things that I found interesting. One in which, in regards to hurricane activity in Florida. So between 1980 and 2021, hurricanes in the United States caused $1.1 trillion in damages. That's 41 years, $1.1 trillion in damage. At an average cost of $20.5 billion per event. In Florida, Hurricane Irma and Hurricane Michael alone caused $43 billion. So I thought that was an interesting stat that I saw. First thing to go over is reinsurance, okay? This is really, really good. Reinsurance, for those of you who don't know, is the insurance company's insurance company. It's the insurance company's insurance. So if in any case they run out of money, they could actually file their own, per se, claim, and they have now insurance on any of their extreme losses or whatever it is that they have. And it's called a RAP program, which basically, it doesn't matter what it stands for, but basically they're going to provide $2 billion in insurance to the insurance companies. That's great because frankly, that's going to allow the insurance company to actually pay your claim in the case that they run out of money after, say, a hurricane. It's also great because if they do qualify for this reinsurance, they actually are going to reduce your premium. So if you're a homeowner watching this and you're trying to understand it as well, they will reduce your premium by having this reinsurance implemented. So I think that's great. Insurers that participate in the RAP program must reduce their policyholders' rates by June 30th, which is after this. Well, I think we're going to come out with this pretty soon around that date. So I think that's pretty cool, right? So you will have savings to your insurance policy because of this RAP program, which reinsurance to assist policyholders. So that's great. Reinsurance is always great. It's always fantastic because it really you can tell sometimes after a severe loss when reinsurance sort of kicks in, all of a sudden they start paying their claims again. That's just me. That's just my opinion. But there being $2 billion being implemented into the insurance industry to these insurance companies that will not only allow them to pay these extreme losses or these extreme events, but will also help reduce premiums. I think that's a huge plus. Second one is the advertisements for contractors, right? So, this is a big one. Basically, advertising for contractors is there must be 3 specific things that are on all of your advertisements, 3 actual sentences. I could read them to you. One of them is the consumer is responsible for payment of any insurance deductibles. That's a great thing, right? I mean, it is what it is. The deductible is there for a reason. If you're a roofing contractor and you are telling the insured that they don't have to pay their insurance deductible, I believe that's always been illegal anyway. It's just now you have to put it on the advertisement. So that's, it is what it is. And then it also states you have to put, it is insurance fraud for a contractor to pay, waive, or rebate all of part of the insurance deductible, blah, blah, blah. So same thing about the insurance deductible. The next thing is, it is insurance fraud punishable as a felony of the 3rd degree to intentionally file an insurance claim containing any false, incomplete, or misleading information. Again, all obvious things, right? They just now, contractors have to put it in their advertisements, and it cannot be less than 50% of the biggest font that you have in the advertisement. So if you have like a flyer that you hand out or something like that, it's going to have to be pretty big. I think that's okay. I think these things are good. I mean, to give you my side opinion on everything that we're going to go over, all it does is it tightens up the insurance claims process. It gets rid of all of the bad apples, and it really is going to make us focus in on making sure we're doing the right thing, which is okay. You know, us at Elite Resolutions, really nothing changes for us. So that's with the advertisements for contractors. They must have these 3 things listed, and if I find something else, I'll go back to it. The next thing is roof. I wanted to go to roof deductible. I'm kind of skipping around now because I have notes and I've got this thing here. So roof deductible, what I want to get started with the roof deductible, there's a new roof deductible that's going to be 2% roof deductible. And that 2% deductible, I want you to be clear, is only on wind-only claims. So if this is, man, I am a mess. If this is in regards to a tree falling on a roof or anything that punctures the actual roof, well, then it doesn't apply. That 2% deductible doesn't apply. But for wind, roof-only claims, there is now a 2% deductible, separate deductible from the actual normal deductible that will be applied. So the roof deductible may not exceed 2% or 50% of the replacement cost. So if you have a $50,000 loss, that deductible is either going to be $25,000 or 2% of the total value of the claim, which will most likely be less anyway. So that's interesting. But also, I did read that if you have this separate deductible, homeowners policyholders, you will also have reduced premiums for that. So you will have less amount of money to pay if you do have this separate roof deductible. Advantage to you on your monthly payments, disadvantage if you do actually suffer a loss. Remember, it does not apply to a tree falling. It does not apply to a puncture. I mean, I have the actual language here, but of course I can't find it now. And then also, it's also an option, right? The insurance company must actually send the policyholder a letter basically informing them that they will be applying this 2% deductible, and you could sign off and you could disagree if you don't want it. If, however, they do imply it, they do put it in there without you sort of knowing or saying no, it will be applied automatically. But from my understanding is your premium should go down as a result of that. So I guess not total bad thing. But just to keep an eye out. Also, public adjusters, roofing contractors, if you do see this separate deductible, I mean, you're going to have to make a determination on whether or not this is worth it for that policyholder to actually file this claim. I mean, if they're going to be coming out of pocket, a ton because of a high deductible, I mean, it may not be worth it, right? So I think you have to be careful on just picking and choosing on what claims you want your clients to proceed with and what claims you think that they should actually just walk away from and not file a claim and maybe come out of pocket. So I think that's pretty cool. So that's the deductible. The next thing is the age of the roof. So age of the roof. So the big one with the age of the roofs is 15 years or more. I know I got that somewhere. Let's see. We've got the homeowners also. Oh, I had it here. All right. So the bill prohibits an insurer of refusing to renew a homeowner's insurance policy based on the age of a roof if it's less than 15 years old. So if your roof is 10 years old, the insurance company is not allowed to just not renew you because of that. They have to renew you, basically, if it's under 15 years old. If the roof is older than 15 years old, the bill does require the insurer to allow the homeowner to have an inspection performed by an authorized inspector. Now, at the homeowner's expense. So, I mean, there's a lot of downsides here. Number one is it's at the homeowner's expense if it's more than 15 years old. And also, it's somebody sent out by the insurance company, which is never fun because you can only think what they're going to say. If they do determine that the roof does have more than 5-year life expectancy, then they are not allowed to not renew you. They have to renew you. But again, they're being sent out by the insurance company. odds are they're going to say that it doesn't have 5 years left in it. Just from my opinion, and as I'm like literally just talking about this, I would recommend, again, it is at the homeowner's expense, but if you have a roofer that you know, okay, you can call a public adjuster. We know a lot of roofers that could be sent over there to provide you the documentation that you need. Hopefully you could combat if they decide to say that they're not going to renew you. Chances are you probably can't, but I mean, that would be something that I would try, is to get somebody looking out for your best interest to take a look at that roof as well. So that's with the 15-year-old roofs. So the carrier, they cannot not renew you if it's less than 15 years. If it's more than 15 years, there will be an inspector that is sent out at the homeowner's expense to determine whether or not it has 5 years or more expectancy left in it. All right. So this one is interesting, okay? This one's my favorite part because this is in regards to claims handling. Claims handling is an interesting topic, and it's a little confusing, so I'm going to do my best to try to do it. It's claims investigation. So there's some new dates on this, some new time limits, right? So the first one is 45 days. The bill requires that if an insurer wishes to conduct a physical inspection, the insurer must do so within 45 days after it receives the proof of loss. My advice is you submit that proof of loss immediately. Now, as we all know, we've got the 30-day time limit. If a policyholder submits a proof of loss, the insurer must confirm that the claim is covered or denied or being investigated within 30 days. I don't know if that still applies or not, but I know that there is a 45-day now where after the proof of loss is provided, that the insurer, the bill requires the insurer to conduct a physical inspection. So that's good. If they don't want to re-inspect it or something like that, it sounds to me like once you provide that proof of loss and you request an inspection, they got to inspect it within 45 days. The one I like is the 7-day, right? So now, let's see. The bill requires an insurer to provide additional claims information to policyholders. Within 7 days of assigning an adjuster to investigate the claim, the insurer must notify the policyholder that he or she may request a copy of the detailed estimate. So what that says to me is once an adjuster is assigned, the insurance company has 7 days to send a letter that says you may request a copy of the estimate upon completion of our inspection. So as soon as the inspection occurs, what we are going to do is we're going to send a letter that says we would like to request a copy of the estimate. And they have 7 days to provide that, basically. If a policyholder requests a copy of the adjuster's estimate, the insurer must provide the estimate within 7 days of the policyholder's request, or if the investigation is ongoing, within 7 days of completion of the estimate. So, in my opinion, in regards to claims investigation and claims transparency, that's what this is called. Claims transparency is as soon as an adjuster is assigned, and I would say as soon as the inspection is completed, you need to request a copy of that estimate immediately. Okay? I also think that maybe we should start thinking about providing the proof of loss right from the beginning. We do try to provide it right from the beginning as early as possible because it puts them on a time clock. So we've got this 45 days to do a physical inspection after the proof of loss is provided. So provide that proof of loss so you can get that inspection immediately. Now, 45 days is a long time, but I like the 7-day because now the 7-day is within 7 days of assigning an adjuster, the insurer must notify the policy that he or she may request a copy of the adjuster's detailed estimate. So once an adjuster is assigned, it doesn't say whether it's a desk adjuster or field adjuster, but you and I know both that as after you file the claim, you get a call within 24 to 48 hours. They have to send a letter saying that you could request the estimate. I would, as soon as schedule that inspection as soon as possible, and as soon as you complete that inspection, I would request a copy of the estimate. Now, they have to provide it to you within 7 days, so you could get that undisputed pretty quickly if you abide by this, and I would make sure that you remind them of the claims transparency, claims investigation section of the bill, right, which is the 7-day model here. So I'm going to leave a copy of this below so you guys can see it, but I think it's interesting. So that's my favorite one. I think most people know now about the AOBs. So an assignment of benefits is when you basically assign a company the full right of that particular portion of the claim. Usually it's in regards to mitigation, tarping and stuff like that. I know some roofers do an AOB, but I know most roofers do they do a work authorization. But basically, and I want you, public adjusters, in regards to the assignment of benefits, the bill also clarifies that the bill specifies that fees charged by a public adjuster are not included in the definition of an assignment agreement. So if there is an AOB on your file, it has nothing to do with your contract with the insured. This is strictly focusing on protecting, repairing, restoring, or replacing insured property following a loss. The bill also adds inspection to the list of services. I guess just a normal inspection. See, it's just complicated stuff. And then also the attorney fees, right? Attorneys can no longer receive attorney fees on AOB. Now, if it's an AOB that's worth $100,000, if you're talking a very large loss, a multi-million-dollar loss where the mitigation required is well over $100,000, then you could still negotiate the attorney fees. They can't get them separate, but they can still charge a contingency on that award, is from what I understand. But if you're talking your typical homeowner where your AOB mitigation bill is going to be $2,000, $3,000, $4,000, $5,000, $6,000, it's not going to be worth it for an attorney to take that on. If I can give some advice, you might want to move, mitigation guys. You might want to move to the work authorization side of it. You are going to have to find good public adjusters to help you, though, because now it's not going to be that separate check. If you don't have an AOB, the beauty about an AOB, honestly, is it made my life a lot easier, because if I had a mitigation company go in there to do a dry out, I let them handle it. They get their AOB signed. I could deal with what I have to deal with the insurance company and not have to deal with the headaches of the water mitigation bill. With that said, that's okay, because it's all sort of part of the package. If you do get a work authorization, water mitigation people, you're gonna have to partner up with a good public adjuster that could make sure that you get your bill paid for what you really want it for. Because basically, what I'm going to be doing is I'm going to be negotiating that as well. That's going to be part of my negotiation. Is, hey, we've got a $10,000 water mitigation bill that you guys have to pay. No, we don't want to pay it. We only want to pay this much. Well, no, you have to pay this much because of this X, Y, and Z. I think it's okay. It puts more responsibility on us as the public adjuster, but that's okay. It is what it is. So water mitigation contractors, you need to find a good public adjuster to partner up with that won't run away with your money. Because what happens is now, and I've had this issue in Texas where I don't think there's an AOB. I just know that in Texas, and it was, I think, North Carolina or South Carolina after some storm. I remember the mitigation contractors missing out on a lot of money, losing out on money, because when the payment was made, it was made with the just full coverage A payment, and the client would just take the money because either they took the money or they didn't know that it was included in the actual payment. So I repeat, you have to find a good public adjusting firm, a good public adjusting company, and a good public adjuster that will make sure that they handle that for you, explain to the client that this needs to be paid separately to the water mitigation company, and that it all gets paid so that you get paid. So, and then obviously if the claim ends up in litigation and your bill's in there, it'll be included in the whole litigation process. So that's sort of, I guess, a workaround, a way around it on getting your attorney fees. You just can't get an AOB sign. It's just is what it is. Honestly, it's kind of annoying, but it's probably good for public adjusters because, like I'm saying, I've repeated it already several times. If you could partner up water mitigation companies with a good public adjuster, it will benefit the public adjuster because now there may be more relationships with that water mitigation company. What else do we have here? Okay, yeah, so when rebuilding a new roof, the insurance company will not release the replacement cost. They will not release the depreciation on that roof until the roof is completed, and they will have to provide invoices on that. So if it's a $20,000 roof and there's $5,000 in depreciation, they're only going to release the ACV, which is $15,000. They will not release that $5,000 until the roof is completed, and they have to provide an invoice and proof that it's been repaired. So... and again, that's mostly with a lot of claims anyway, but they're probably going to be pretty strict with that. And then the last thing is the attorney fees. Guys, this is just super, super complicated. I just know that, like I said, with the AOBs, the attorney fees are no longer there. Multipliers are going to be less available. Okay, they're making that much more strict, the multipliers for the insurance company or for the attorneys to basically multiply their fees and what they charge. I'm going to get crushed by attorneys on this. There's going to have to be a breach of contract too. which that makes things a lot more complicated. It's not going to be as easy to file a lawsuit. It's just not going to be as easy. There's going to be a lot more by taking away a lot of the multipliers, by trying to force more of a breach of contract. You're going to have to file that CRN, civil remedy notice, to actually prove that there is bad faith. It makes things a little bit more difficult. It's more sort of, that's the Texas way of doing things. But it's going to drop the amount of lawsuits going on there, which is not a bad thing. Us at Elite Resolutions, we try to avoid litigation as much as we can. We do try to handle the claims. It's our last ditch effort. And normally for us at Elite, by the time we do actually get to litigation, it's because there's been some kind of bad faith. It's because there's been some kind of breach of contract. And a lot of times either we have the attorney file the civil remedy notice, and we alert them on that. And the notice of intents, guys, that's obvious already since SB whatever it was last year. The notice of intents need to be filed. If the attorney does not file a notice of intent, the policyholder may actually require to have to pay their attorney fees and costs and the insurance company's attorney fees and costs, even if they win. I thought that was interesting. So the notice of intent, if you're an attorney watching this, you better file that. But that, again, should be obvious. You should be filing it no matter what. And that's it, guys. I know, God, I feel like I was just rambling. It's just that I've been reading this for so long. It's kind of confusing. It's a lot of stuff, but that's sort of what's going on. I hope you guys could understand it. So the first thing is the SB4 25% bill, 25% rule is gone. Next thing, the SB 22, you've got the reinsurance program of $2 billion. You've got the advertisement for contractors that has to have these three things that I mentioned earlier, and it has to be 50%, at least 50% of the size of the biggest font. You've got the roof deductibles, right? So the roof deductibles, there's going to be a separate 2% deductible now that will be applied to roof-only claims, only wind claims and hail claims too. If, however, a tree falls or there is a puncture through the actual roof, that 2% deductible does not apply, okay? So if there's a tree falling or a puncture through the actual roof, it does not apply. And also, the insured must sign off on it that they disagree with it. So there will be a letter sent out, policyholders, that says, do you want this 2% deductible? If you do not want it, you have to sign off on it. If you do want it or you do happen to keep it, you should get less of a premium amount that you have to pay. Claims handling or claims investigation. There is the 45 days to inspect after proof of loss is provided. Also, after an adjuster has been assigned, they have 7 days to send you a letter saying that you could request the estimate. Once that inspection is done, you need to request the estimate because they have to provide the estimate to you within 7 days after you request the estimate. So provide the proof of loss early, request the estimate as soon as the inspection is complete. They have to provide it to you. Old roofs, this is number 6, old roofs. 15-year-old roofs. If it's less than 15-year-old roofs, they cannot drop you. If it's 15 years or more, they will send out an inspector paid by the homeowner to determine whether or not there's 5 years or more left in the policy, left in the roof. If there's not 5 years or more, they could drop you. If there is a 5 year or more, they will have to renew you. Problem is the inspector is being sent out by the insurance company. That's number 6. Number 7. The insurer must receive proof that the deductible was paid, and they will not release the replacement cost, or they will not release the depreciation until invoices are provided. Attorney fees and costs with the AOBs. Remember, with the AOBs, public adjusters public adjuster contract does not apply in the AOB, and also attorney fees cannot be charged when an AOB is there. So that means AOBs, you should probably move our mitigation contractors to a work authorization and partner up with a good public adjuster that could help handle your portion of the claim and make sure the insured pays. Also, with attorney fees, multipliers are less available. You're going to have to prove more breach of contract, bad faith, civil remedy notice type stuff. And if you don't file an NOI, you could ultimately kill your case and have your client pay for all kinds of attorney fees and costs. I don't usually make videos this long anymore, but I figured that's where this would go. I hope that was understandable. I got the reinsurance, the roof damage, bad faith, claims investigation, got the AOBs, got the attorney fees. I think that's it. Oh, the last one. OIR, the Office of Insurance Regulation, are requiring insurance companies now to provide them with all kinds of statistics, all kinds of information so that they could find out exactly the reasons for the liquidation of these insurance companies, for the increased policy hikes or policy premium hikes, for all kinds of stuff, for why there's so many claims litigation, why are they increasing premiums, why are they going into liquidation, how many public adjusters are being used, how many losses. OIR now is going to start getting all kinds of information to do all kinds of studies that I believe in the next 5 to 10 years will go a long way in really singling out the bad apples of this industry, because they are on both sides, guys. I am an avid APA member, American policyholder. Shout out to Doug Quinn. There is just as much fraud on the insurance company side as there is on the consumer side, okay? And we need to get rid of all the bad apples so that we could actually focus on doing what's right, which is putting the policyholder back to their home again. So that, I think, is a great part. The OIR is actually doing that now. Office of Insurance Regulation. That's it, guys. I'm exhausted. I hope you got something out of that. I mean, that's a complicated video. I've actually been hesitating to do it. I hope you got something out of it. Share this with everybody that you know. Share this with your friends. Share this with policyholders. Share this with other public adjusters, with roofing contractors. I hope I was able to explain it in layman's terms, because I know it gets very confusing, but that was the best I can do. So I hope you got something out of it. Again, my name is Vince Perry. Subscribe here below, because there's a lot more stuff besides just this video. Follow me on social media, Instagram, LinkedIn, Facebook, and leave a comment below. Tell me how much of an idiot you think I am, if I got everything wrong, or if you agree, or your comments I would also greatly appreciate. That's what we got, guys. Every Wednesday, we have a new show that we do. Go to commercialclaimsadvocate.com, go to eliteresolutions.com so you can find out more information. But that's it. I'm tired of talking. Goodbye. Peace out. Later.